Equity news on Equity Access, your cross-section of the stock markets and of developments in the Zimbabwean economy. A beautiful evening it is to you. Ibn Mabunda signing in. Let's get on to business. Our news tonight, ZSE listed properties concern Marsh Holdings today held an annual general meeting in the capital with the trading update being given by the managing director, Mr. Gibson Mapfidze. While Marsh Holdings is a properties firm which is heavily invested in residential accommodation, but is also into commercial property, particularly retail, industrial, as well as other forms of commercial property. Of note, according to the trading update, is the fact that this update is for the 4 months to the 31st of January, and in the period the company registered a 7% growth in its revenue to $1.68 million. As well, their voids position improved from a 29% to 24%. Well, as I said, Mr. Gibson gives us the trade report. Let's have a listen.
In terms of our revenue, so as at 31 January 2019, it stood at 1.68 million, which was 7% above the same period last year. Then it was 1.58 million. But our revenue was 3% below budget. So I'll talk to that just now. So in terms of the upward movement compared to prior year, it's mainly because of the occupancy levels. So occupancy levels went up in Q4 of 2018 to 76%, up from 71% prior year. So that additional revenue helped us in terms of realizing that. The negative variance that you see, 3% against budget for current year, is because of the delays in selling the Ruwa Windsor Park stands. We are commencing selling those ones in April, that should correct going forward. We have also, so the numbers I've shared do not include the rent reviews. I'm just going to talk about them now. Our rent reviews were effective 1 February. So we have managed to review 75% of our portfolio effective 1 February and achieved a 58% revenue upliftment from 1 February to 30 April. So we've also reduced our rent review terms from 12 months to 3 months now, given the dynamics in the market. So the idea is to have an opportunity going forward to look at our rentals and review them on an ongoing basis. Then looking at our expenses, our property expenses for the 4 months stood at 311,000, and they were 23% lower than prior year. So the major contributions to that is the improvement in occupancies helped us in terms of tenants carrying the void cost that we were carrying last year for the marginal 5% increase. Then as well, our provisions for bad debts have gone down, and this is because we collected significant amounts from September to January 2019, so that has an impact on our provisioning as well. In terms of current collections, so we stand at 86%, and that explains our decrease in provisions for bad debts. Then admin expenses, they have gone up 41% as compared to prior year, standing at 496,148 for the 4 months. And this is mainly because of price increases. So this is really inflation and also increase in staff costs after engagement of the new employees. Then moving on to our operating profit for the 4 months. So our operating profit we are reporting excludes fair value adjustments. So despite the delays in sales of the Ruwa Windsor Park stands, we realized a profit of 1.1 million, which is 47% higher than prior year, which stood at 655,000 and 22% above current year budget. So our operating profit margin, it went up to 62%, up from 45%. So going forward, we are embarking on optimizing our processes, internal processes, and we project that operating profit margin to further improve from 62%.
Just to have a quick look at the performance of the corporation dating back a few years. Well, these guys are coming from a trade negative, so to say. In 2016, they recorded losses of $5.94 million. In 2017, for the full year, their profit position scaled to 1.57, as well as 2018, $2.39 million. While in my conversation with